Hello, everyone. Welcome back to As the Daily Brief Churns. No, I don't know. Anyway, hello, everyone, over on YouTube free video. This is sort of our dovetail to our daily brief. Let's just make sure YouTube is working. And, ooh, it's frozen over on YouTube. I wonder if it is actually working. And, ooh, hey, it is. It's frozen. Kind of a we had a fantastic report on the Daily Brief today. We had our Dutch connection check in from Breda. And really interesting to hear the analogies and stories coming out of the Netherlands with regard to this illness. We also, and by the way, Sjord is TRI's Chief Technology Officer. And right now, his big focus right now is, and actually I thought this was a kind of a cool image because for computer programmers, this is sort of their ideal dream as we go from fragile to resilient to anti-fragile. And actually, we even talked in the daily brief about how traders probably start out very fragile, and we have to get them to the point where they are resilient, and then actually get to the point where you're anti-fragile, where you can actually switch positions, and of course you've got a nice, flexible, robust trading plan, and you can just go with the flow. That's definitely down the road, and probably most people watching this YouTube video, let's just assume that you're at the mom and pop investor level. Probably not like trading hourly setups, or let alone, I mean, we have one trading model that we're doing on the site right now that's trading the futures contracts off the 5-minute charts and trading trade setups. And we had a beautiful setup come in here through overnight and hit profit objectives. And we even took some profits on a bit of weakness there. And that was, and actually this is an interesting testament about market state today. Because what we kind of noticed was whole European, why don't we just jump right over to the chart deck? We don't need to talk about that stuff. Where are we here? Where is my chart deck? I got it around here somewhere. There it is. We had a report from Sjord as well. We had a beautiful fundamental analysis report from Jamie, another TRI OGer in the UK, and they're still planning on doing their May Happening event TRI meetup in Birmingham. So by all means, if you happen to be in the UK area and we are permitted to meet publicly, watch out for Jamie and the crew. I'm sure they're going to have a lot of fun. And I might even hop on a plane and just crash the party. I'm still mulling that over, but obviously, given the current situation with this virus and illnesses and stuff, the governments actually might make that decision for me very quickly. So, and interestingly enough, Jamie's number one message right now is not the time to be a hero in the market. Markets are extremely chaotic. We have an old rule that technical analysis works best in the absence of new fundamental drivers. Clearly, we have fundamental drivers driving data points right now, driving the market. So, maybe just cool your jets a little bit. And hopefully, that's been my message over the past little while, is we got to let everything settle down. We got to start hunting for signs of internal strength, i.e. divergence. And then we actually have to start seeing some W's come in, which would be awfully nice to see. The US dollar index, and remember all this is a basket of foreign currencies pegged against the US dollar. You can see that it ran up and basically banged up against our upper channel line here recently, and has run into a bit of resistance. Really, this market was going gangbusters to the upside. You can see overnight action. We were pressing the highs. Basically, the stock indexes had all gapped lower and were pressing lower. And then all of a sudden, at about 2 o'clock my time, everything started to firm up, which was really interesting, and this is why it's really important as a student of the market to just simply watch price action and listen to the message of the market. And at about 2 o'clock, I think I showed you guys earlier, we were trading this day trading setup. This was coming out of the London kill zone. All of a sudden, everything started to catch a bid. Why? What the hell was going on? And the interesting thing for something like Bitcoin, I'm kind of jumping all over the place here today, but we were watching this level really closely. You remember in the broiler chicken show yesterday, I was like, oh boy, inside bar reversals, this is not good. And for whatever it's worth, all of these fractal patterns, they're not broken until these highs are actually taken out, or we carve out a new fractal pattern. Since we made a new low here on all three of these this morning, this is nothing more than just a bounce within a bearish fractal pattern. Please understand that. But, we were watching very closely, and I was concerned. I think I had even sort of expressed that in yesterday's broiler chicken show that, if they don't step up and defend this thing, all hell could break loose here. So I actually put a tweet out yesterday, following the big dump, we have to let price consolidate. You can see that it put in double bottoms in our crazy ass chaos theories. If these double bottoms hold, then it means that she wants to work her way back up top, but there's no guarantee that that's going to hold. We did go out and make a higher high, then we pulled back and we came up, and last night we were sitting there threatening to put in this big honking M. And if that M had confirmed, then we have to start thinking about, well, now downside chaos levels start rearing their ugly heads. So this was a pretty important battle here in Bitcoin overnight. And it was really interesting to watch this because we had lost this uptrend line. This is an excellent lesson. You're all getting a free tutorial here today too. That we have a rule at TRI. You cannot trade the break of a trend line. This is extremely dangerous. You actually have to let the trend line be broken and then market structure on the other side of the trend line. Really great lesson in that for everybody today. So there is bot levels for our AB equals CDs off the top. If we had lost this 555.2 level, oh boy, all hell could have broken loose here. And notice, again, right around that 2 o'clock, I think all the bankers were sitting there overnight going, if we don't do something, this market is going to crater in the morning. Because like I said, the futures markets, they were all gapping lower, and they're still lower. I mean, this has not bottomed yet, folks. And it was only because the Fed came out with another bazooka. How many bazookas do they have? And sort of stop the flood, but we haven't really bottomed here yet. And that's what sort of prevented this market from just puking out, which is actually what I think the market has to do before we can actually really start. We have to see like raw evil capitulation where people are just stock market's collapsing and everybody just watches it with their jaws dropped and they're just not doing anything. They're just watching it go into free fall. That's usually the sign of a bottom. And I don't think we're quite there yet, unfortunately. So what was the pivot, the catalyst that I was thinking that was going to sort of mark the bottom? I think it really has to be that the U.S. government, through the Congress, actually comes out and says enough is enough. In 2008, they created a program called the TARP program. And that sort of solidified that the government was backstopping the market. So I don't think we've quite got there because from what I understand, and I even warned about this over the weekend. I thought I had the news, but I guess I don't. I'd sort of warned over the weekend that I've seen this happen before. What usually happens is everybody is freaking out. The first bill goes to Congress, and of course all the uglies come out about the cycle. The fact that these major corporations are asking for a bailout even though they've been lining their pockets, bidding their stocks up, and of course getting paid all the stock options, blah, blah, blah. Why weren't they paying debt down and cleaning up the balance sheet? Stock price would have stayed sideways in that kind of event. And of course there's also some really nasty sort of potential insider trading going on by politicians right now. So I think a lot of the sort of House of Representatives, and frankly speaking, I even heard it out of the U.S. Senate, where a lot of the senators were like, whoa, 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 slow down. We're not just going to write a blank check here. So that's what's, we still have to wait for that to actually pass. And I don't know whether it's actually even gotten off the ground yet, let alone, it has to first go through the Senate, then it has to pass the House of Representatives. So this is still a long, long way off, in my opinion. So, when we think about risk on, risk off, and through Jamie's report today, he's like, why are you taking risk right now? Like, what's the point? Do we have any W's? Do we have any signs of divergence? Do we have any fundamental justification that there's a bottom in here? I don't see any. And so his basic report is cool your jets. And I have to agree with that. As long as stocks keep painting lower lows here, there's no hurry. And I know a lot of people are going to be like, well, but I want to catch the bottom and the market might just take off, kind of like what gold did here. Well, you notice that gold actually has put in a double bottom here. So it's actually been a bit of constructive work here on the gold to let this rally actually start versus stocks and things like oil that just keep making lower lows. They just don't stop making lower lows. In this kind of case, I have to say, risk off clearly is carrying the day, and risk on, just cool your jets. Specifically with regard to the stock indexes, I've talked to you guys repeatedly recently. I'm very interested in buying some of the Canadian stock market for my registered plan. Again, gotta find W's, gotta see signs of bottoms. Don't see any W's yet, don't see any signs of bottoms. So I'm just cooling my jets, and whatever it's worth, I haven't bought any stock in a while now. And I got a funny feeling I'm not going to be buying any stock for a while. So I do have a bunch of core positions on the books. None of them are really going to affect me, even if they go off the board. Think little old lady risk management kind of strategy. So with regard to stocks, everything's on pause. It's interesting because Bitcoin's sort of caught between both worlds here. As I had said, you could clearly see that Bitcoin caught a bid on that Fed announcement. And I might make the argument, even though crypto kids are going to absolutely hate this, but the absolute people that you hate the most in the world, I think actually helped you today. And they put a floor in this market that literally, as I said, it didn't matter whether it was Dutch stocks or whether it was Bitcoin or whether it was the S&P 500. Everything was on its knees. And then all of a sudden, on this sort of rumor about the Fed, the whole damn market pivoted, including Bitcoin, which I know is kind of a piss off for a lot of people when I say that. But I really do think that it's just as much of a risk asset as any other risk asset in the marketplace. As I had sort of said earlier, we dodged a huge bullet here this morning. And the tweets that I put out were like, I think the whole crypto world just sighed a huge sigh of relief. Unfortunately, though, this is not necessarily like, okay, well, everything's fine. We go straight up from here. This is just sort of like, whew, well, we bought ourselves a little bit of wiggle room. And what ironically enough, what I've been actually worried about here recently is, if this actually is a top, what we should see is we should actually start seeing a move to new highs here, come up and break these highs, and it'd be on a divergence. And you can see now they can go take this high out here, and momentum isn't nearly near those old highs. So we're not out of the woods here yet, everybody. If anything, absolute best case scenario is we've established a trading range. 69.40, now it's called 69.50, down to about 56.50 is our current trading range off these MEX contracts. Obviously, your market is going to be specific to you. As well, too, we need to keep in mind that OKCoin, and I don't know if MEX and Bybit and Binance and all these other forwards contracts markets, whether they're the same day, but OKCoin does have a big forwards contract expiry coming up here. This is the 3-month contract. That's now the 2-week contract. So they do have a new 3-month contract, but we do need to understand there is a big event coming up here for some of the forwards markets. So that might be a liquidity window that we want to keep an eye on. For the time being, I would still say we're in the process of asking whether this is a serious bottom. And interestingly enough, for me to actually believe that this is a serious bottom, I actually would like to see these lows tested. If we just keep marching our way higher, then to me that says that at some point down the road we're going to have to come back down and do some testing of reload zones and all that kind of stuff. So the way I'm kind of looking at it right now is the Fed bought us some breathing room. That's about the way that I look at it. I think if the U.S. Congress does not come through, we could see a whole new wave of selling. Is it people are actually selling Bitcoins because they want to get out of Bitcoin? It's a problem with Bitcoin? No, I don't think so. I think this is just purely a function of liquidity. I need to find money somewhere. So, hey, there's that Bitcoin I got there. Hit the bid. I need the cash. And of course, we all know that in about a month and a half to 2 months' time, we're going to go through a halvening event. And the cost of production, ironically enough, is going to be up in this area. So I've suggested to everybody, if we do get that puke out, do get that dump, I think, man, that is just like cheap Bitcoins. It's kind of ugly. Nobody really likes to talk about this, but I would have loved to have seen a big dump down below 2,000. Would have freaked everyone out. Big capitulation, total washout, and then that marks the bottom. But it doesn't look like that's going to happen now. Now, having said that, if we roll over here and we go back down through this 555.2 area on MEX, get ready. This is still very much floating out there. And as I said, dollar cost averagers, all those kind of people, man, this would be such a gift, I think. It really would. But, only time will tell. We'll see what happens. And then, of course, remember, too, if we look at those daily charts, what I really want to see to actually mark the bottom is I'd actually like to see some divergence here in these indicators. Right now we've got, little Davo signals that are working away. It didn't surprise me, market's moving up. I would like to see a nice serious test against these lows and then on better momentum, i.e. divergence, and then I can feel fine. As I said earlier, if we keep marching our way straight up here, at some point we're going to have to roll over and come back down and test these lows. So I'm not really, right here, right now, no investment decision whatsoever. Traders, trading setups. Traders got to trade. Ironically enough, on TRI, we have so many different algos and stuff running. Here's a great example of an awesome algo that one of our OGs, the level 1 instructor, Grim, put together. He calls it the lemon. And wow, look at that trade here this morning. Kaboom! So, it's, if you fancy yourself, you're at the point where you think you can trade trading plans and you can be crisp in your behavior, rock on. If you are relatively new to this game, I think you got to cool your jets and just wait for some signs that, yep, the W's are in, the bottom is in, and away we go. The only other thing that I'll mention here before leaving, we do have some people on the site who do trade gold. Gold's an interesting character here now. I still think it's just doing its dead cat bounce off of this panic dump low. It's great to see a couple intraday setups kind of ideas are both working away here now. I'm just leery about everybody getting too in love with gold here because remember that a lot of this QE, a lot of this money printing just simply goes straight to the banks. The public never sees the money. What it's simply doing is it's just offsetting the bad loans that these banks gave out to people that people are defaulting on. So if that's the case, it's not really overly inflationary. And the best way that I can describe that is I think it's in your interest to go watch this interview with Harry Dent. I think he explains the mechanics of this deflation period that I think we're going to go through. I think he summarizes it really well. In the daily brief today, we talked a little bit about, are we going to just rip the Band-Aid off? All of these corporations that have this bad debt, you all go into bankruptcy, insolvency, probably see 50, 60, 70% unemployment, and we have to go through the Great Depression of this generation to get it done. The consensus is that the bureaucrats and the people that are in charge, there's no way in hell they're going to let that happen. So what are they going to do? They're going to shift all those bad bonds over to this clown's balance sheet. He is going to print tons and tons and tons of money. And the interesting thing is, people have sort of said, is there any historical reference? Is there any sort of similarity? And the answer is yes. It's Japanification. So if you want to see what our future is going to look like if the bureaucrats continue on this path, well, just go look at what Japan's done over the past 10, 20 years, and that's a pretty good idea of what our future's like. So, on that note, it's not really a whole hell of a lot new to tell you here. I do see that there are trades perking up, and traders got to trade. I don't know whether you in the public, whether you're ready for that kind of trading or not. It's high octane, it's high stress. What I would simply say for everybody is if you can go and pick up some Bitcoins at or below cost of production, that's value. Nothing wrong with that thinking. Do we have technical breakouts for the higher time frame players to be confident that a bottom is in any of these risk assets? No. So, interestingly enough, for like moms and pops, the general message right now is still cash is king. You want to go and do nanny nibbles on ideas that you like and put a little bit of money to work in ideas? Nothing wrong with that. But slow and steady wins the race. And for heaven's sakes, don't go and mortgage your house or sell your home and go all in on any one asset here. You may be right, and that may turn you into a genius and you become a hero and people think you walk on water. But I'll tell you, I can tell you at least 100 stories of people that have done that and it didn't work out, and you never hear of those people again. Is it really worth the risk to take that kind of gamble? I don't know. I as a financial planner and a guy who is licensed financial planner, there's no way in hell I can endorse that kind of thinking, right? So, okay, everybody. Hope that was of some benefit. You got a little bit of helpful information out of that. Slow and steady wins the race. Not a hell of a lot for me to do in stock market land. I am interested in hunting cute little setups like I showed you on the gold and, trading the stock market off of like 5-10 minute charts. I am interested in nanny nibbles against some of these speculative assets. I noticed that the moonshit proxy, it's disappeared. So I guess they wiped all those people out over there. But, keep your eyes peeled. There might be something fun to do on this bullshit if we can actually form a bottom here, if you're interested in altcoins. What I kind of noticed is on my altcoins, everything's just sort of going sideways. There's not a hell of a lot going on here. Nanny nibbles, take positions in names that you like. There's a couple names, Link and this XTZ. Links actually look like it's come down into a buying window for me. I might go and pick up some of that. Nanny nibbles, I don't have any of that. And this XTC as well. And this is sort of that same conversation like Mana, where I got to pick my levels, I got to work my bids, and I just got to be patient and wait. And that's really the kind of market that I think we're in right now. Okay, everybody, have yourselves a great day. PMA for the win. Hang in there. I know this is going to be a tough slog. Capitalism sometimes is wonderful. Sometimes it's a real pain in the butt. And right now, we're going through the pain in the butt phase. PMA for the win. Play from a position of strength. All the best, and bye for now.